Okay, news bits on your screen. Let me read out what we have. And the board of Idea Cellular has approved fundraising. They're going to issue up to 32.6 crore shares on a preferential basis and QIP and rights for fundraising as well. The fundraising will augment the long-term capital resources, all is well known. Remember, the expectations was that Idea will raise about 5,500 crores to pay debt. The preferential issue price, the expectation was that it will be around 100 rupees per share, and I think that's what it's come out to be as well. The stock taking a bit of a leg up, but this is in sync with what I mean everybody was working with, but giving a bit of a pull up to the stock as well. So interesting announcement. Actually, I was personally thinking that it'll come out post market hours. It's come out just right now, but this should be interesting. We should have Somit ready as well. If Somit is there with us, we'll just get to him in a moment from now. Okay, we do have Somit. Somit, what did you make of this announcement?
So the company will be raising close to 3,250 crore rupees by allotting shares to promoter group entities, that is Bala, TMT, and there are 3 other names in this list. Also, the board has sought approval for further fundraising through QIP for shares worth around 3,500 crore rupees. So they had already said that they would be raising funds through either QIP or preferential issue or right issue. So this is in line with their announcement, and mostly this funds will be used to pay debt for the company, which is now very important for the company given the leverage ratio which has increased for the company over the period. In the last 2-3 quarters, it has increased from around 5 times to 7 times. Also, that debt is around 54,000 crore rupees as of now. So this fund infusion was needed for the company to pay their debt and to be financially stable going forward.
Somit, the press release also mentions that they've still not decided which route will it be. It can be a QIP or a rights issue, or it can be a preferential allotment as well. Could you just take us through the scenarios if, let's say, if it's a right issue, how does this changes the shareholding of the promoters?
So as of now, this will the 3,250 crore that they will be infusing will be a preferential issue to promoters. So the promoter shareholding will go up to 47.4% in the company from current 42.4%. And further, they have sought an approval to raise funds up to 3,500 crore rupees. So if it's a right issue, then the shareholding will remain the same. But if it's a preferential issue to promoters, again the promoter shareholding would go up. And if it's a QIP, then we'll have to see how the demand comes in, and we'll have to see what the shareholding remains. But the catch here is that Axiata, which owns around 20% stake in the company, will have to be given the first offer to buy in shares in Idea Cellular, because they have the right to maintain their shareholding in the company at 20% level. So they'll have to first offer shares to Axiata, and then the promoter can infuse funds in the company.
Okay, and the issue price, I think roughly works out to around 100 rupees. So
yeah, it's around 99 rupees, 99 point something.
Yeah, 99 point something, because
which is below the current share price as of now.
Yeah, that's true, but not too below maybe, and that is why market is kind of taking it positively. So
yeah, another thing why they are taking it positive is because the promoter is showing interest in the company and they are infusing funds, and it's not that it's a right issue where they're asking money from the public shareholder. Also, it's the promoter who's infusing funds in the company.
In case it's a right later on.
Yeah, in case it's a right later on, then they will be asking funds from the public shareholder. Currently, there is the promoter who's completely investing in the company.
Somit, the change in the promoter shareholding, will that not be a concern because the merger with Vodafone is still underway?
It will be a concern for Axiata because they have the right to maintain their shareholding at 20% in Idea Cellular. For the merger with Vodafone, no, it's not a concern.
All right, Somit, thanks a lot for bringing all these details. That's the breaking news that Idea Cellular will be raising funds of almost 3,250 crore, and these funds will be used to pay the debt of the company. Well, it will be allotted via preference, QIP or rights issue. That's still to be decided, but this will also take up the promoter holding, as Somit just highlighted, to about 46 or 47%, I guess. The current promoter holding is almost 42.4%, and the promoter stake will rise to almost 47.2%. The change in promoter holding will not have any issue with the merger which is underway for Vodafone, but as Somit highlighted, one of the shareholders, Axiata, I guess that's the name he mentioned, they will have the first right, because with this change in shareholding, their stake could fall below 20%, and they will have the right post this to increase the stake. So stocks reacted positively, Neeraj, and I think the issue price is 99.5 and we're trading above that, 104.
Yeah, I'm just trying to understand if there is some impact on Grasim as a result of this as well. Birla TMT is one of the parties, I believe, it's been mentioned here. So let's wait and watch if indeed Grasim has an impact thereof or not. Just bring up the stock price of Grasim as well for just a moment before we get in our expert on board. That's okay. No big moves there. Okay, Mahantesh Sabarad, he's head of retail research at SBI Capital Securities, joins us right now on the show. Mahantesh, thanks so much for joining in. Since we are on the topic of Idea and this announcement that they've made, any thoughts on this? And if not Idea individually and on this announcement, then on the telco space at large?
So firstly, we're not tracking Idea per se, but then any fundraising activity in a highly indebted company is always welcome because it improves the balance sheet position. And if it's going through the promoters committing more funds, and it's all the more welcome for the other set of investors. So not tracking Idea, but if I remember when the Vodafone Idea deal happened a long time back, the assumed valuation was somewhere around 156 rupees per share at that point in time, and that the then existing number of outstanding shares. Now with the additional equity shares, it will probably the valuation will fall. I'm not saying that Idea has the upside until then. I'm just trying to say that this tells us that the promoters are very committed to the company and conclusion of the smooth merger arrangement with Vodafone. Having said that, on the telecom industry, over the past year we have been generally been positive despite the apparent concerns related to profitability, apparent competition driven cash flow issues. We had highlighted actually that for Reliance it was a welcome cash flow inflow situation that was happening post its high capex phase that they went through over the last few odd years. So for the telecom industry, we believe that the entire consolidation that is happening is a positive move. Any commitment coming in the form of equity being pumped into various companies is again a welcome development.
Keep in mind, I think the current net debt to EBITDA for Idea as of September 2017, let me rephrase myself, was 6.5 times. And the merged entity's net debt to EBITDA cannot exceed 6.5 times. With an assumption that the merger would have happened by March 2018, and with an assumption that this net debt to EBITDA would have risen for Idea individually, unless they do this fundraising, pay some debt, it's an impediment to the merger. So I think I would presume that one of the rationale is to make a buffer for this. I think Soumit's mail also said this, and pave the way for the merger as well. So that's in line with what this means, and therefore Idea Cellular, in focus for the session today. The markets by and large, Mahantesh, not out of focus. We've actually had a fairly decent outing today. The broader markets too are performing well. Shrugging off almost all concerns. I mean, crude moving up, has not really done anything to the views. The commodity space continues to by and large move up as well. What is the view at SBI as we head into this earnings season and head into the budget?
Actually, you see, we belong to the retail side, and then we are seeing what we are able to see is that the retail investor interest in stocks has been going up every other day. The indirect way that the market is sensing it is through the mutual fund inflows that we have seen for the last entire year, and even in the case of direct equity infusions by retail investors, it's humongously large. And therefore liquidity is what is driving the markets, and we are not really surprised. There are concerns that you just highlighted in terms of crude oil prices, for example, going up, commodity prices going up, and etc. But at the same time, you should also understand that rupee is largely stable. In fact, it is marginally appreciating. So the commodity price impact is actually a bit softened on most of the corporates that the equity markets tend to follow. And therefore it's not really affecting the overall markets, and we are entering a phase where we believe that there will be an infra boost coming in. There will be this bank recapitalization led buoyancy that will be there in the markets, and we should see earnings actually reviving much sharply than what we have seen over the last 5 years. So probably the FY 19 earnings growth rate would be a 6-year or 7-year high.
What is really moving, in today's trade, if you focus on some of the home improvement names, so you have ceramic tile companies that are doing well, you also have asbestos sheet companies like Bissa doing well. If you had to pick up one or two mid-cap names from this segment, which one will you go with?
So since you mentioned home improvement, I would pick the ones that are in home appliances actually, and lighting. It's not exactly home appliances, but lighting is a space that is really buzzing for us. A stock like Eveready is something we believe becomes a good mid-cap home improvement kind of stock to pick. And of course, you have the larger names like Voltas, where you have both the infra recovery led commercial real estate housing growth led growth of helping room air conditioners really grow. So Voltas is another company that one would really look at.
Mahantesh, what's the view on the steel makers? A lot of brokerages have changed their view and they're turning bullish on the steel makers. In fact, we've seen the demand improving domestically because of exports from China. They've been slowing down. That's what we saw at least in the last year. Is there anything in this space as a house that you guys like?
So, we generally have a very negative view generally on steel makers. But yes, we have been also surprised, just as the market has been, with the kind of stock rallies we have seen in frontline steel making companies, SAIL, Tata Steel, JSW Steel, and even JSPL. But having said that, what's really under focus right now is who are the efficient producers of steel. It's finally a commodity business, so there is an input cost pressure that you have in terms of iron ore prices continuously rising. At the same time, if you have buoyant steel prices, your ability to capture the margin, that is the conversion margin, if it remains significantly higher, then you tend to do well. We seem to be on the peak of that conversion conversion margin cycle right now, and therefore the prospects from here in on for most steel companies doesn't appear that bright.
Okay, so that's the call coming in. Sticking with the commodity names, you have paper companies doing well. JK Paper is up around 10%. There was a very successful IPO recently, Mahantesh, you must have looked at. And also various chemical names like Meghmani, Sudarshan, Nosil, they're all moving up. Anything that you like from any of these commodity space?
Actually, we have been highlighting the chemical space for quite some time, and most of the chemical companies that you just named have been on our call radar for quite some time. And it's all linked to, as we know, the Chinese crackdown on polluting industries. Chemical industries is one of them. India is surprisingly finding a lot of, all those orders that used to come from European countries to the Chinese manufacturers is coming to the Indian manufacturers' door. So many of the chemical companies are doing well. The names that you just talked of, Meghmani or Nosil, have significant exports to Europe, ranging from anywhere between 30 to 60% of their revenues is exports. Even agrichem, that is crop chem companies also have significant exports to Europe, and European buyers are insisting on what is called as green chemicals. So Indian manufacturers are the ones who are able to produce what is called as green chemicals, which means that they are producing chemicals in an environmentally friendly manner. And we believe that the chemical industry will continue to outpace all other sectors in the market, more particularly in the mid-cap space. So yes, we do like these companies.
Okay. Thanks a lot for taking time out for us and joining us on the show, Mahantesh. Moving on to commodities. In fact, commodities have been on an up move with metal surging for 2 straight weeks. In fact, before correcting recently for last 2 days, crude continues to move up, has registered healthy gains. Is this rally here to stay, and what are the factors leading to this up move? Let's ask Robin Barr, Head of Metals Research at Societe Generale, who joins us on the phone line. Robin, thanks for joining us. Good afternoon from India. What we have seen is, the up move in all these base metals could be directly related with the dollar correcting. So more or less around the same time in second week of December, we saw dollar kind of peaking out and starting a down move, and metals started moving up. Would that be the right argument, so to say?
Yes. Good afternoon. Thanks for the opportunity to speak with you. I think the dollar weakness that you've mentioned and the rise in base metal prices was a significant factor, helping to at least underpin the complex. But I would point to several other factors as well as also playing a part. So optimism over global growth in 2018, more of the same, if you like, that we saw in 2017. Another factor would be the capacity consolidation that is occurring in China as a response to anti-pollution measures, closure of illegal capacity in the aluminium sector, for example. And another factor would be prices needing to remain elevated to incentivize more supply. If we agree that global growth is going to remain positive over the next few years, metal demand will increase for that reason, but also electric car revolution, China's One Belt, One Road initiative, and so on, then clearly with markets balance moving into deficit, there is a need for higher prices to incentivize new mine supply pretty much across the board.
Mm-hmm. So what kind of gains do you see here on in 2018?
It varies by metal because we see moderate demand potential for all the metals, maybe some better than others. For example, copper, aluminium, maybe nickel will be the beneficiaries. Other metals maybe not so much from a demand perspective. What will be the differentiator, we believe, will be the supply response. So we think that some metals like nickel that need to see more supply come through, that could see, we're forecasting a 25% rise year on year in terms of an average price for 2018 versus 2017. For copper, we'll be looking at around about a 10% increase year on year. Similar for zinc as well, and aluminium as well. So we would argue anywhere between 10 to 15% generally. Some outliers, as we've mentioned, would be nickel, that we would see rising around 25% year on year. So supply constraints or not, as the case may be, we see as really being the differentiating factor.
Okay, Robin, so you mean to say this is not simply a currency play, but there are demand and supply dynamics really playing a big role in this up move. Which one would be your favorite metal, so to say, for 2018, Robin?
Our favorite metal would be copper. This is a metal that is supply constrained. That is to say, the market is in balance, moving gradually into deficit over the coming years. So there's a need to incentivize more supply. That supply will be coming from challenging jurisdictions, challenging because of the geology, maybe lack of infrastructure, political instability in terms of Central Africa, Zambia, the DRC, to give an example. And on the demand side, copper will be benefiting from urbanization as populations in developing economies move to the cities. There will be a need to obviously roll out the infrastructure, road and railway network, which is all metals intensive. When we add China's One Belt, One Road initiative, of which there are investments happening right now, when we look at the electric vehicle revolution, the need for more copper in a typical car. Electric car is 3 to 4 times that of a conventional car. We need copper for the charging infrastructure as well, to charge the battery in an electric vehicle. So for those reasons, constrained supply and I think very positive demand fundamentals, we would see copper as being a standout metal for 2018.
Thanks a lot, Robin, for taking time out for us this afternoon. So Robin completely convinced that copper is going to be the metal of 2018 and commodities rally will continue. There could be some hiccups if suppose dollar bounces back, but that would be an opportunity to buy.
Well, since we're talking about commodities, I just want to pull up Jindal Steel and Power. Remember, this was your top gainer in the Nifty Metals Index yesterday. The stock is trading at day's high, up almost 8%. Just want to remind, yesterday IDFC had come out with a report on this company where they said that this could be the turnaround time for the company. They'd been posting losses for the last 4 years and they expect the company to now post profits from FY19. And I guess we also had an interaction today with the company in the morning where they did specify that they do expect the steel prices to go up in the near future, and they sounded pretty confident of passing on that impact to the end consumer. So Jindal Steel and Power, things looking good. They've also said that the interest payments in the last 8 to 9 months for the company have been on track now, and their blast furnace, the capacity utilization there has almost reached 90%. So that's good going for Jindal Steel and Power. I guess it's been a pretty good week also for them. The stock trades almost at about 52-week high. But as we speak, the markets too are trading not at day's high, but almost there, 10,487 for Nifty. Bank Nifty, remember, today is the weekly options contracts expiry, and what the data was suggesting, it could be in the range of 25,300 to about 25,500. So do watch out for that range in today's session, and especially the PSU banking space. That's been another outperformer today after that news came about that the announcement could come soon. What exactly does it mean, Pradeep? And I think now the bet will be on how much capital gets allotted to which bank.
Yeah, and some details have already come out. So what is really interesting, rather curious, while RBI has said specifically that we'll be funding or capitalizing these stronger banks. If you look at the list of banks that are likely to benefit, the first list which has come out, and also look at the price movement, which is actually in accordance with the list which is in public, are the weakest ones. So you have UCO Bank moving up, you have IDBI moving up, you have Central Bank, which is the only banking stock that has hit, only PSU banking stock, which sometimes hits the circuits. Otherwise, none of these government banks I have seen hitting circuit filters. So, I mean, why are these names really buzzing? That's a bit of a shocker, but let's hope that the merit-based capital allocation principle will be followed later on. Maybe.
I remember when this news of bank recapitalization had come, it was Punjab National Bank. That stock had rallied almost 35 to 40% in a day's time. And I guess today also we've seen...
They continue to move up.
Yeah,
PNB is up 3.5%, was up 4%. SBI is up, BOI, all these stocks are moving up. But then IDBI gains 8%, UCO Bank gains 8%.
Yeah, IDBI, in fact, that had a gap up opening today. It's been able to sustain the gain. So that was the first one among that PSU banking lot, which opened with good amount of gain. So good going for the entire space. The PSU banking index today is trading with gains of about closer to 2% as of now.
But some of the details are actually a bit negative, that these bonds won't be tradable, they won't have the SLR status, which means these funds are kind of locked. But then net, there is no transaction here. If you look at it, it's a cash neutral transaction for both government and banks. So
is it just going to be a book entry or a fresh capital infusion? It's a book entry, right?
But banks get interest on bonds.
Okay.
Yeah, that sense. But anyways, this debate can go on and on. We have a management at hand, so let's actually get that management on board. Swan Energy is the stock in focus. The company has received a nod to start the Bangalore real estate project, expected to earn a revenue of 300 crores if I'm not wrong. Stock has come off though, but let's try and figure out what's the revenue potential, what's the timeline for the same, with Chetan Selarka is the CFO of the company. Good having you, Chetan. Thanks so much for joining in. As I understand, it's a 2-basement plus 20-story real estate project. When do you kickstart, and what's the expected timeline for the completion of the project?
We started the construction work. It's all done. At least we are reaching to the plinth level, and we're expecting to complete this project in the next 2 years' time, 1.5 to 2 years' time.
Okay. And the numbers that we have is that the expected revenue from this would be about 300 crores. Now, are those numbers correct? And two, since you've already reached a plinth level, you would have a sense of how the demand for the project is looking like.
This is considering the current prevailing market price in that area. Though we have not yet launched this project in the market, we have just taken these estimates based on this current prevailing rate in the market.
But you've constructed up to the plinth area, but you've still not opened the project for the markets.
No,
any reason for the same?
No, we are not yet open to the market.
Any reason for the same?
No, we will go once we'll start launching this project. We will go to the market now. We wanted to be in the market after after plinth level.
Chetan, how are you funding this project?
As on date, it is all from the internal accruals, and we may go for some smaller portion for the construction loan from any PSU banks.
And how much would that be? Because the size of, you're expecting to garner almost 300 crores from this project?
No, that is the construction cost around. We won't be considering the market scenario. We may go around 30-35 crore rupees on construction loan from the PSU banks.
Okay, and the press release says there will be about 100 to 113 flats. What is going to be the average ticket size for each flat?
In the range of, it should be around 1 to 1.5 crore.
Okay. I just have one small question, Chetan, on how is business by and large looking like? Because I looked at your standalone numbers and I thought while the revenue front you came off a bit, the bottom line performances were reasonably okay. How is performance shaping up for you as a company?
See, we are in two different business activity at present. One is textile. We have a fabric processing unit with 100,000 meter a day capacity. See, and the real estate. However, in the real estate, after Bombay real estate development, this is the first one we are launching in residential area in Bangalore. So the numbers, what you see in the last annual reports, mainly pertains to the textile. And the EBITDA, PAT and everything is not comparable, as you agree with me, in both these business activities.
Okay. So
this, my point is this real estate business will, again, through a subsidiary of the Swan, SEL, so will be reflected whenever there is a revenue from this activity in coming years.
And what projects are on as of now, Chetan? I mean, is this the only one or do you have something else? And what's the land bank that you're sitting on?
Textile, we have land bank, and only real estate project is this. We have two properties on leased out property in Bangalore and Hyderabad, where we are getting the lease rental. And focus is on the energy terminal project.
Okay, can you tell us about that? Sorry, I don't know about this. Can you tell us a bit about this terminal project?
This is initially 5 million ton regasification unit we are setting up at Jafrabad, Gujarat. It's a initially 5 million ton capacity, which can scale it up to 10 million ton, where we all the tariffs and all permissions are in place. The construction work is already also started at the site.
Okay.
I just have one question. Just want a clarification, Chetan. So currently, Swan Energy has three business verticals. As you said, textiles, real estate, and energy, right?
Right.
And out of these three, in the current financials, we've not seen any numbers from the real estate business?
No. In the current financials, there is nothing from the real estate business except of lease rental from the leased property.
Okay, and any sort of guideline or timeline, pardon me, that one can expect from when or from which quarter the real estate numbers will start reflecting in?
Say, in this new project, definitely once we go to the market and then start looking, we can have revenue maybe in that proportion, how much we book.
And what sort of margins are you looking at from your real estate business?
This all actually I can't. This is the numbers are not really available just now with me, but then that depends on the area and the locations and the overall market scenario.
All right, Chetan, appreciate you joining us today and giving us those updates with regard to your real estate businesses. On all the best with your new projects. That was the management of Swan Energy. Let's see what the stock's actually doing, because the first half of this year has not been that great for the company. I was just looking at the financials. So 193 is where the stock is trading. And remember, as the CFO of the company highlighted, the real estate numbers are yet not reflected in their financials. But let's put spotlight on Kajaria Ceramics. That's the stock that has gained for the second straight session and has given returns of over 50% for the last 12 months. Pradeep is here to analyze the chart of Kajaria for us. Pradeep?
Yeah, so let's look at the chart. It looks pretty simple. On the daily chart, what you can see right now is the price movement of last 3 months. And here, the pattern stars that we're talking about, as we have marked it here, this is an inverse head and shoulder from where today we have seen a breakout. So what is an inverse head and shoulder? As you know, head and two shoulders is all that you need to find here. So the pattern starts here. This is the base actually. This is your first shoulder. Here is the head. Here is the second shoulder. And the neckline is breached in today's trade. So there is a breakout with above average volume. So that is what is significant on this chart. This will kind of give you a very, very strong up move on the higher side. You can establish targets here, but we haven't really tried to give any targets. We'll ask our experts to give us targets on that. But what is also significant, worth watching here, not only that for last 2 days we have seen above average volumes. In fact, if you look at it, you know, in this last decline that marked the lower head here, most of these days the volume was below average. But now when the stock is recovering, the volume is above average. That kind of tells you that the up moves have stronger volume support. That is yet another indicator that tells you how strong a head and shoulder pattern really is. So this is a strong pattern. Second thing, if you look at it over last 3 months on this daily chart, the head that we are talking about, the lowest point on this pattern is higher than the previous swing low. So you have a higher bottom in place. What is also interesting at this point of time, and I have not really marked it here, but this level is almost at 200 days moving average. So stock has taken support at a very, very important technical level. So that is also significant, and after that it has formed a base and given you a breakout. So there are several key technical indicators that are pointing at a strong bottom in place for Kajaria, and this stock is all set for the next up move. Looks like. Well, let's see what our experts have to say about this. Bala, Chief Market Technician at cashthechaos.com, is joining us on the show. Jai, if you have had an opportunity to look at this chart, what's your view?
Yeah, I did have a look at it. See, I just have to clarify something here. You know, head and shoulders is usually a reversal pattern for a pattern to work, it has to first reverse a particular trend. So if you see Kajaria Ceramics, it's actually already in an uptrend. So there is no reversal to be done. And if you look at the momentum, which you have actually pulled up on your chart, momentum is actually slowing down if you pull up the weekly charts. So I'm a bit skeptical about this pattern. Yes, you can use head and shoulders and reverse head and shoulders as a continuation pattern, but the efficacy of it is much lower. But what you're saying is going to pan out. I think the price projection is somewhere about 90 rupees from current levels. So I'll give it a 50-50 opportunity. I normally tend to use this pattern as a reversal pattern than a continuation pattern. Yes, it is very well within the technical parlance to use it as a continuation pattern. But given my preference, I would just take a 50-50 chance on it.
Okay, so there's 50% probability. In fact, it's possible if you look at the historical accuracy, you can always assign a probability to any pattern. And Jay has rightly pointed out that you look for this pattern close to the bottom levels. But sometimes they do occur when the stock is already in a strong up move. So what it actually tells you that after a consolidation, the stock has started to move up. And around 90 rupees upside is what Jay really finds it possible here with a 50% probability assigned to it.
What about the markets by and large though, Jay? Good afternoon, thanks for joining in. How do the markets look like? We perched well today, about 0.5% higher, and the broader market strength has been there the last couple of days.
Yeah, it's better to look at the larger participants than the indices at this point of time. We have seen the market chop around 10,500 odd levels. We need the market to break out beyond the 10,550 resistance. So until that, it's going to be a bit of a chop. But obviously, the index is moving because of the components, and the components are producing opportunities. A couple of weeks ago, we spoke about something cooking up in the specialty chemicals and the agrochemical space. Today, all media is all about fertilizers and how specialty chemicals hitting record highs, and the market is doing exactly that. So so there are opportunities like that. The index components are presenting opportunities. We spoke about UPL, that still is in the same space that we spoke about just a couple of seconds ago. So just watch out for these names, and we have a price projection of about 950 to 1,000 for UPL. That's likely to do well. Besides that, I have a couple of strategy. When we have the time, we'll discuss that.
We do have the time right now, Jay. Let's talk about those.
Sure. If you look at the metal space, that's doing pretty well. And if you look at the commodity currencies like the Aussie dollar or the New Zealand dollar, they've been doing pretty well. So these are further indications that the commodity space is likely to do much better. And what it's seeing right now at this point of time is just a part of the larger move. So but the risks in some places are getting elevated. So you got to be very careful about your picks. I have chosen Welspun Corp at this point of time, which is within the metal space. I think if you place a stop below 125 to somewhere below 120, I think this stock is likely to scale somewhere close to 195. So that's an interest. That's coming from the strong sector. You can choose this one as your pick from the strongest sector.
Jay, since you spoke about the metal space, would you like to go ahead, Jay?
Yeah, go on. It's okay. I thought I'll go on to the next pick.
Since you mentioned about the metal space, would you like to place your bets on underdogs like Jindal Steel and Power and Steel Authority, which have been exhibiting strength in the past few sessions?
Yeah, between those two names, Steel Authority has been the strong one, and it's an underdog, and as you rightly pointed out, that's got much more potential to do further upsides. But if you want to pin me down to something that is a good bet for the January series, you can definitely go for Tata Steel. I think it's likely to scale 780 to 800 around this expiry. So that's a better bet than these. But if you had to go for those two names you mentioned, I would pick Steel Authority.
Okay. Gaurav Bissa, derivatives analyst at LKP Securities, is also joining us on the show. Gaurav, what are your favorite picks at this point?
Good afternoon. First recommendation was Cellular Steel was quoting at 274 to 75, looking quite robust. If you look at last two trading sessions, we have seen aggressive long position getting built in double digits. It's already moved up now. So I would recommend some other stock in place of Cellular Steel. The next pick that I would like to recommend is Hexaware. This is one name that is looking quite strong. If you look at last 2-3 days, it has added somewhere around 23% OI addition happening. Today also we are seeing good amount of long positions getting built. It's given a breakout on daily charts. So in all
try and reconnect with you once again because the audio is not at all clear. I think he doesn't want to recommend JSW Steel now because stock has moved up quite a bit and he wants to change the stock. But we'll try and reconnect with Gaurav once again. In the meantime, Mayuresh Joshi, fund manager at Angel Broking, is also joining us on the show. Mayuresh, good afternoon. We are back to 10,500, very close to that now. Do you think the correction or consolidation that we had seen over the last few days is over?
Afternoon, Pradeep. I think a large element of the market going into the pre-budget presumptions will keep the index probably in a consolidated range. So again, as I was pointing out last time, maybe it's a broad range that we are probably looking at, not expecting a sharp correction. But somewhere again, I think at level of around 10,700, 800 is not probably ruled out. But instead of levels, I think the key macro factors is something needed to be watched out for. So Q3 will probably give us the base in terms of how the earnings are recovering. And if they give us that kind of a picture, I think the markets will take it very, very positively. So I think look at the broader picture at this point of time. I think the range for the markets and levels probably constrained in this 300, 400 point range, at least till the budget.
Okay. I think Bala was talking about another strategy of his. So just before we continue our conversation with Mayuresh, Jay, you want to finish off the second stock that you wanted to speak about?
Yeah, it's SREI Infra. I know this has been a laggard for the last several weeks to even multi-months, I would say. This had done pretty well from 2015 to 2016. It went from 30 to 135, and it's now starting to pull back to the important support levels. And usually around these important supports is where the next leg usually begin. These are technical terms. I'm not getting into it. I would call this as the next leg of the uptrend, and if you wanted to place a stop below 100, I think this stock is heading past 140. So I think it presents a low risk entry point, and one can use this as a trading entry point for the stock.
Infra, interesting. Okay, Mayuresh, I think we were just talking about how some of the specialty chemical names or chemical names, some of them may be commodity chemicals as well. Sudarshan, for example, is into pigments. But a lot of these pockets, a lot of these stocks are doing rather well today. What's happening? Is it an expectation of a fairly decent earnings month, the one that went by, or is it some new realizations about growth that could come in?
Again, I think the sector, Neeraj, as a whole is very broad-based, but largely I think the elements that probably are premised to the rally, to the stocks, which can very well continue into the coming financial year as well, is the problems faced by a lot of these Chinese manufacturers. Now it happens on two counts. One, I think the shutdown that we've probably seen in existing facilities because of the effluent discharge problems have abetted the revenues and realizations of a lot of specialty chemical companies back home in India. And the second element, I think all the new companies that might even mushroom over the next few months in China, I think the labor cost arbitrage will not be that high as it was earlier. So again, I think as labor costs, electricity costs keep on moving higher, I think our players become equally competitive, both in terms of the product that they deliver and the end realizations at which the product is getting delivered. Having said that, I think one really needs to probably have a selective bottom-up approach in this sector. Shri Pushkar is something that I've liked in the past. My own expectation in terms of how historically they've performed, they'll very well exceed the top line growth of 16-18% on an average that they've been posting. And again, I think the backward and forward integration in the entirety of dyes, intermediaries is going to probably abet their bottom line in a significant manner. The stock has moved up, it's no longer cheap, as is the case with a lot of specialty chemical stocks. But I think if one really has a view of a year, year and a half, I think selectively these players should keep on performing well, at least on the financial front.
The stocks seem to be doing okay. Just want to mark Sudarshan Chemicals individually as well. That stock is up about 12 or 13%. I'm just trying to think about what is it that could get these stocks excited. I think Mayuresh outlined it very well. But just on this one individually, Sudarshan Chemicals, remember management when the October numbers came out had guided to a very strong or a reasonably strong quarter 3 FY18, on a YOY basis. The management had stated that Q3 FY18 will be much better than Q3 FY17. It's, remember, also seen improved traction in the domestic pigment business in the month of October. So on the basis of that, they were confident enough that Q3 FY18 will be much better than Q3 FY17. I think the expectations of an earnings per share is about 20 rupees in FY19. FY18 will be a bit of a washout here because Q2 was really bad for them. But FY19, the expectation is about 20 odd rupees. And a company which is growing reasonably well, probably trading at about 21, 22 times. I think 21, 22, 23 times is the new 15 times in the market currently. So maybe the market likes it. But 12, 13% higher for this one. Nosal is the other one, which has done remarkably well today. I saw a couple of other ones. Oriental Carbons and Chemicals are the other chemical names or chemical company which has done really well. So a clutch of these specialty stroke, semi-specialty chemical names are doing rather well for themselves.
Well, the other one
trade.
is Make Money Organics. That's also gone up in today's session. I guess that's the one which sells pigments and agrochemicals. So that's also seen gains of almost closer to 12% as of now. So it's good going actually for chemical as well as the fertilizer stocks. Jay, I wanted to talk about a large cap stock now, and which is a Nifty constituent. I remember speaking to you about L&T in the past and asking you the question, if Nifty had to scale higher from these levels, will L&T have a role to play in it or not? And today we've seen good gains from L&T. I guess it's up almost 3%. We had the list of stocks coming from CLSA yesterday for 2018, and L&T also featured in their top buy list. What's your outlook on this company?
I'm not so sure that this is going to outperform the market or lead the index from here on. I could be wrong, but what I see from the charts, my interpretation is that it's facing some speed bumps around 1350 and 1400 levels. So I think the upsides from these levels look limited for me. But maybe it could go face those resistances, pull back, and probably take out the resistance. But as of now, I don't think it's going to lead the market higher.
That's the call on L&T. SJVN, Mayuresh, if you have been tracking the stock has moved up today on the news of probably board will consider a buyback. But if you look at the fundamentals, valuations, I think the dividend yield will come to around 7.5%. Is quoting at some 10 PE. Do you like the stock?
So I think all these parameters, Pradeep, look extremely attractive. And obviously, I think it's a long drawn-out process in terms of the entire story playing out for SJVN as well as other players probably within this space. And one really needs to account for all this, that it's a long gestation period in which I think the dynamics of this business improve, and it happens gradually over a period of time. So again, my take is that if it's a patient long-term investor, then somebody is holding on to the stock, continue holding.
Okay, I think Orbit Export 2 will have a board meeting to consider buyback, where promoter shareholding is already about 61, 62. Yesterday the stock was up 10 to 12%. Can we check what's that doing? Okay, no, Orbit Exports is the stock I'm talking about. That'll just come up on your screen. It was a stock active after the company informed the exchanges that they will be looking at buyback of shares. Okay, it's up another 2%. I guess this is the fresh 52-week high for this counter. But let's move on and talk about buzzing stock of the day, and that's Jindal Stainless. Nikki Mirchandani joins us with more details as to what's brewing in that counter today. Nikki, over to you.
Thanks, Samneet, for that. On the day when steel stocks are up, stainless steel is a counter which is an interesting bet that you could be looking in. Look at the Jindal Stainless Steel performance. Today it has risen by 16% to a level of around October 14, 2016. Volumes are high at 14 times the 30-day average volumes on NSE. And if you look at the yearly performance, it's a good 200% rally that we're looking in for this counter. So what's really moving or buzzing for this counter? The company is holding meetings with various fund houses and investors today. It's basically selling its turnaround story that it has achieved over a span of time. To give you just a small rundown of what the company is exactly, it's a stainless steel producer which has a market share of more than 60% and a strong clientele base coming in from OEMs, autos, railways, etc. If you look at this chart, which talks about the FY17 performance of the company, the turnover is 8,500 crore and export percent is 30 to 35. Also, the long-term debt of the company looks to be pretty much decent at this level, and it's in the point of 1:1. The other thing that I'd like to point out is the turnaround in capacity utilization. Now, if you look at FY12 onwards to FY17, you would see the capacity utilization actually going up from 12% to a good 93%. That's quite a beat there if you look at the capacity utilization, the way it's moved up, and also the production per ton. And also the investment, I think the investors will really be, it's an interesting thing that the company has turned profitable back in FY17. FY15, FY16, as you see in the chart, the company was negative on its PAT, but then FY17 seems to be a turnaround story where it has done a profit of around 58 crore. And in the first half of this financial year, it's already done 69 crore. So that's a good turnaround story that we're looking in. That's the investor presentation that the company has submitted on the BSE.
Okay, thanks Nikki for these details. Mayuresh, is that a stock, Jindal Stainless, you like in metal space, or you'll prefer something else?
It looks like, as Nikki was explaining, I think the numbers probably are vindicating the fact that something's turning right for the company at this point of time. I think the various applications of its products are quite large, and as the consumption patterns grow, I think they are probably in a very sweet spot. I think what really needs to be looked out also is the raw material cost inflation that probably eats into their margins. So any inflation on that front can probably have a little negative on the margin front, though I think the pass-through, at least partially, is mandated on all these products or the end products that they sell. But yes, I think it looks like an interesting story from a long-term perspective. Apart from that, I think within the metal space, I have been liking the steel counters. So I think JSW, Tata Steel can give a very good operational performance going forward. What they do probably in terms of all these distressed assets and the kind of valuations that actually come to the forefront and what they bid for will be very, very interesting. And at the same time, as domestic demand is extremely robust with realizations remaining strong, the EBITDA per ton should probably keep on improving over the next few quarters, and that augurs well for them. So I think Vedanta, Hindalco, apart from the steel counters, is something that I still believe have some steam left in them.
Okay. Since you're on the topic of metals, JSPL's 33,000 crore investment is finally bearing fruit. The 9 million ton per annum Angul facility is on stream. How will the major reap the benefits? We spoke to the management earlier on in the day. Here out a small slice of that conversation.
It is not only the iron ore prices which have gone up very, very substantially, almost double in certain parts of this country, but also the coking coal prices have also been going up. So combined together, I think for most of the steel makers, this cost impact itself will be more than 2,000 rupees per ton. And going forward, I certainly expect that the prices of steel are going to go up because nobody can actually absorb all this cost. And but as far as demand of steel is concerned, last quarter, in fact, we do see some upward swing in the construction business in the country. And going forward next year, we do expect that all the initiatives which have been taken by the government are still being taken. That should start very clearly manifesting itself in higher demand for the construction grade steel. As you are aware, we are not only into construction grade, but also we manufacture the steel plates and some other products. And as far as plate demand is concerned, we find that it is remaining quite steady, and that's a fairly large business for us. And as far as construction grade demand is concerned, that's going to go up. So overall, we are quite positive that this cost impact will be actually absorbed by the market, and the steel plant should be looking for a reasonably good time as far as demand is concerned.
How much will your costs go up by on account of higher iron ore prices as well as coal prices, as you pointed out? And will you be able to pass all of it on to the steel consumer?
I would imagine that the prices will go up by about 1,800 to 2,000 rupees, depending on the route which people follow. And we do expect that these prices, since the demand is going to go up, most of it will actually be passed on to the consumers, because they won't be, the steel plants will not be able to manage otherwise. So it is something which is bound to happen.
And what's the latest update on the Angul expansion, sir, on how that will boost your financials as well?
The Angul expansion, as you know, one of the most important milestone which we wanted to come to was commissioning of BOF furnace. And I'm very happy to tell you that last month, in fact about 10 days back, we have started our BOF furnace. And the entire process is going on quite smoothly. When you start a new process like this, it takes a couple of weeks, 2-3 weeks to kind of stabilize. And we are in the process of stabilizing this. So we are very happy that we have started this. Now what is going to do is to help us in making sure that the entire complex, the integrated plant which is there already, should start working at full capacity. The blast furnace was running till recently only at about 50% capacity. Now we are in the process of ramping it up, and going forward in the next quarter we do expect to reach almost the, let's say, 90% level of the blast furnace ramping up, blast furnace capacity. So we are it's a very, very important time for us, and we do believe that it's something which is going to help us tremendously in the coming months and the year.
Certainly hope so. Mr. Ansari, a couple of questions. The last time that I spoke with Mr. Naveen Jindal about 2 or 3 months, or maybe slightly longer than that ago, deleveraging was in full steam. What's the current scenario on the debt front that you can give us?
Yes, despite increasing the production level and despite adding the new facility and so on, I'm very happy to tell you that our debt level has not gone up. At the current scenario, we are fully current in the sense that there is absolutely zero overdue as far as payment is concerned. We have mapped our entire repayment schedule as well as the interest payment schedule, and we are quite confident that we can meet this entire thing. On top of it, in order to make the things even easier, we are still looking at, in fact, we are working on certain, let's say, assets which we can monetize. I mean, these assets are obviously the non-core assets that we are looking at. But right now, I'm not really in a position to tell you that which assets and when, because that's all work in progress.
All right, that's the management of JSPL talking about the demand outlook and also how the steel prices can pan out. They also mentioned that their interest payments have been on track for the last 7 to 8 months, and none of the accounts so far has been classified as NPA, but they do have some issue going on with one of the banks. But the counter has given you great returns, not only today, in fact, yesterday also we saw 7 to 8% gains coming up for JSPL. But actually the steel space is buzzing today. The Nifty Metals Index is your top sectoral gainer. I think Gaurav Bissa is back with us with a better audio this time around. Gaurav, you were talking about your trading strategies, if you could take us through them.
Yeah, so I was just saying that since one of the names, JSPL has already moved up, I would like to replace it with some other name from the same space. In this metal space, that would be Hindalco. We have seen 6-7% long positions getting added today in Hindalco. 280 call option has one of the highest concentrations. I would recommend buying about 280. Stop loss of 276 from the upside, targets of 290, the highest weight concentration is creation 290 call option. That would be my target. And one more name which is not in the action of Swan. I think that is looking quite strong. Given a breakout on daily chart, one can put in 1020, one can have a stop loss of 995, which is 6%, a 10% up move net can be seen. And coming back to the F&O space, second recommendation would be on Hexaware. In last 4 trading sessions, we've seen 26% long positions getting added with a price action of 4 to 5 percentage points. So not much of a price action has seen. It's seen a breakout on daily charts as well. So there's a proper amalgamation of derivatives and technical data. There are both the parameters. One can have a stop loss of 346 on the upside. Targets of 360 can be seen. Once 360 is held on, I would not be surprised if it touches the level of 370, 375 in the current minute itself.
Okay. Those are some ideas from Gaurav Bissa as well. But we're talking about recommendations that have come out from the sell side. Here's Yash with a very special segment, or a special discussion point. What was the least tracked for analysts in the last year has turned out to be the most tracked this year, at least in some stocks. So the question mark is, what are these stocks? Let's head across to Yash, who's got up this interesting analysis. And Yash, explain to us what is it that you're trying to mention Why this piece that you're doing?
So thanks for that, Neeraj. So we have 5 stocks which have not only given handsome returns in the year gone by, but have also caught the analysts' attention in terms of the number of buy recommendations. So let's talk about Graphite India. As you can see, the stock price of the share has gone up as much as 12 times, but the number of analysts having a buy recommendations was 0 for the same period last year and have gone up to 4 buy recommendations. So what's worked in its favor? Well, the graphite electrode prices have seen a sharp uptick in the last 1 year or so after Chinese authorities clamped down on the highly polluting facilities, which not only pushed up the graphite electrode prices but have also seen the needle coke spreads reach multi-year high. We also have Future Lifestyle, which has seen a 175% share price move, with seeing the number of buy recommendations going up from 0 to 5 on the back of various tailwinds in the Indian fashion markets, such as rising disposable income, changes in the consumer patterns in the rural market, introduction of GST, among others. Also, Dilip Buildcon saw a major upgrade in terms of the number of buy recommendations from just 1 buy recommendation to nearly 12. Well, what's really worked for the company? Again, a strong order book of over 14,000 crores as of September 2017, along with timely execution, has worked in the favor of the company. Also, the business model, which involves owning of assets or equipments as against the industry practice of leasing them, has helped the company realize higher operating margins, and has also the company's stock price has seen a more than 300% up move in the last 1 year. Similarly, PNB Housing Finance, with just 1 buy recommendation at the start of last year, which is 3rd Jan 2017, has seen the number of buy recommendations go up to almost 10 as of 3rd Jan 2018, on the back of a strong order book which has grown by as much as 58% compounded annually over FY12 to FY17, along with a superior asset quality compared to the industry average. Also, their entry into newer geographies like the high potential tier 1 and tier 2 industries, cities, has helped the company gain its market share and has made it one of the analysts' favorite stocks. And lastly, on a top 5 list is Edelweiss Financial Services, and also the analyst recommendations have gone up as much as 5 times, as they believe that the company's well-diversified portfolio of financial services makes it one of the most well-positioned companies in its NBFC segment, and also their entry into newer businesses will help spur the growth in their earnings going forward.
Okay. We'll watch out for some of these. In fact, the market has already watched out for some of these. I think they've had a fabulous run. The question mark is whether that can continue or no. Mayuresh, no unusual names out there, but the number of people who started liking Dilip Buildcon in the last 1 year has been stratospheric. What is the view at Angel Broking been for Dilip Buildcon?
So again, I think looking at the way the order book has shaped up for the company and the expectations of management maintaining that top line of 7,000 odd crores with EBITDA margins in excess of 20%, that does augur well in terms of how the return ratios will pan out for the company. Secondly, I think what is also abetting is the kind of capital infusion that one expects to come in through the Chhatrapal Group, and that is quite significant. So one expects around 550 odd crores in this year, and a substantial portion coming next year, which will reduce debt significantly. So it frees up the cash flows in terms of bidding our new projects, and that probably will ensure that the IRRs will keep on getting maintained at those higher levels. And with deleveraging happening on the balance sheet, I think the return ratios will further improve here on. So again, the valuation argument might probably just be against the company with the kind of moment that we've seen. But if they're able to deliver, as the management says, I think there is no question in my mind that the premium valuation can probably get justified if the numbers keep on coming through and the deleveraging happens, as I explained.
Okay, and let's look at how Dilip Buildcon has moved over last 1 year, and our producer has just pointed out that almost around a year back the stock was quoting at 52-week low, and from there the stock has gained around 330%. That's humble, right?
52-week low is around 224. Look at the gains it's had in the last 1 year. So that's good going for Dilip Buildcon. In fact, one of the few companies in this space who get bonus for completing their projects on time.
Ahead of time, actually.
Ahead of time, you're right, Neeraj. Yes, I remember chatting with the management, and they said they expect almost 100 crore of bonus for FY18. also. But the other stock which is doing well, just pull up the intraday chart of Titan. That's trading at day's high, fresh 52-week high for Titan. And remember, there was some management commentary which came in this week where they said that they expect better jewelry sales in the third quarter, and the numbers will come by. The first half of this fiscal year has been great for Titan company. Mayuresh, if I can come to you, second half where the guidance is already looking good. PMLA was lifted in the month of October, which will be reflected now in the third quarter earnings. The festive season was delayed for the company, which means the third quarter has to be bumper when it comes to the jewelry sales. They've been revising their guidance when it comes to the jewelry segment on the upside. But from current levels, do you find any more value in the stock price of Titan, where the valuations actually now look very expensive?
The valuations definitely are nominally expensive at this point of time. But if you look at the placing of this company within the entire industry, I think a lot more dynamics are happening in terms of garnering share from the organized sector. Secondly, again, I think the core performance has been exceptionally good. So if you're looking at their core jewelry business, I think that is expected to keep on doing well. If you're probably looking at their Golden Harvest scheme, that has probably garnered good steam as well. The watches business has been showing some good performance over the last 2 quarters, and last quarter's numbers were very, very good. So my own sense is that the numbers will keep on coming through for a company like Titan. The two things to watch out for, as is for the whole industry as a whole, is the pricing of gold and what probably happens over the longer curve. And second, I think the hedging policy that Titan probably has, which can probably have some amount of detrimental effect if the prices move against them. But apart from these two reasons, my own sense is that the numbers will keep on coming. So, though it is an expensive stock, I think investors who hold on can clearly keep on holding this stock.
Okay, so that's the call coming in on Titan, and let's go across to Yash Upadhyay once again to figure out which are the Fab 4 stocks that Yash has chosen for us. Yash?
Pradeep, so we start off with Orion Pro Solutions, and the stock had surged as much as 8% today after the company announced that its US-based subsidiary Cyber Inc. would be entering into a definitive agreement with KPMG for the sale of its identity and access management business for a total consideration of about 220 crore rupees, with the deal expected to be completed by January of 2018. Hindustan Foods is up as much as 10%. In fact, it's locked in a 10% upper circuit after the company said that it has started commercial production of pest care products at its Jammu and Kashmir facility. Now, the facility will be supplying these pest care products to its customer Reckitt Benckiser for a period of 7 years and is expected to add almost 125 crores annually to its overall top line. SJVN is up as much as 11.5% and had hit a lifetime high of almost 39.65 on the BSE after the company said that it would consider the proposal of a share buyback at its board meeting on January of 8th. And lastly, we have Aero Granite. The stock was locked in a 20% upper circuit for the majority part of today's day after Dilip Kumar Lakhi bought in close to 1.5 lakh crores, 1.5 lakh shares, or almost 1% of the overall equity in a bulk deal yesterday.
Thanks a lot for that. So a clutch of names which are active, and of course Yash fairly active in the last 15 minutes as well. Some interesting stocks being highlighted out there. Mayuresh, if we still have you, just before we let you go, Aero Granite, any thoughts here?
No, don't cover that, Dheeraj. But again, I think we did discuss this stock, Navkar Corporation, a few weeks back. And our own sense is that the numbers should start showing an uptick in the next couple of quarters. And as they show an uptick, the compounded growth over the next 2 years can be quite substantial because of the capacity increase that you've seen both at the CFS station at JNPT as well as their Vapi ICD. So a large element of top line growth in excess of 30%, bottom line growing in excess of 35%. And the stock, even at these levels, remaining extremely attractive compared to the entire logistic pack, should augur well. So the numbers should start coming through and flowing through over the next 2 quarters, and that should augur well for the stock. So I think Navkar Corp is something that I'll be liking from the mid-caps.
Well, that was the other one in which I think Ashish Kacholia bought in today. But of course, remember the price that which was bought was 187. The stock had already rallied yesterday, just about a minor rally in today's session. Mayuresh, good having you as always. Thanks so much for joining in and giving us that perspective. Jay, I don't know if Pradeep asked this to you already, or maybe he did. He started off with Visakha, but I was trying to figure out if you indeed look at themes and sectors, and the home building space is just doing so remarkably well today. From a Visakha to to pockets like these. I think we also had some of the consumer durable companies do reasonably okay in the session today. Anything that stands out for you? And if no, if you have a chart check on Visakha Industries.
No, I don't track that so closely, and it's one of those second rank stocks, third rank stocks for me. So I don't have a view on that. But what you got to do, these are the ones that already started moving, and they are moving quite fast, and some of them are in circuits, and they're doing extremely well. But we like to be in stocks that are before they start moving and making the explosive moves. Now we spoke about crude all through November and December, saying that they're going to move, and right now crude is at $68 and it's just warming up. So we spoke about Aban because of it's going to be a crude play. So watch out for this name. One day we'll talk about this when it's on the circuit.
Okay. Jay, do you track carborundum?
No, I used to, but I don't have the charts in front of me at the moment.
Gaurav, if we can have a technical view going on Adani Enterprises, the counter was up about 7 to 8% yesterday. Another 4% gain seen in today's session. And I guess the futures of Adani yesterday saw a good amount of long build-up. What sort of levels would you be watching out here on the upside?
So there were aggressive long positions, and that's not the case just today or yesterday. It's been the case in the last 7 or 8 trading sessions. We saw a good amount of long rollovers also happening in the name. Has given a breakout as well above 170, 172. So the immediate price targets come around 192, 192. If somebody wants to buy, these will not be the ideal levels. We've already seen a jump of 10% in the last 3-4 days. I would rather wait for a small dip towards the level of 175 and stop loss of 170 when one can buy for targets of 190. That would be the right way. Somebody has already bought, keep trading in, have a trading during stop loss and play for 190 sort of targets. But if somebody wants to buy fresh, buy on this is the right strategy.
Okay. Jay, before we let you go then, actually it's a good cue that Navneet has given, and then we'll get in Nipun Mehta, of course, with his thoughts too. But Jay, before we let you go, any of the Adani Group stocks that you would want to trade? They've had mixed fortunes in the last 10 to 15 odd sessions.
Oh, definitely. Adani Enterprises is on a breakout, and it's very likely to do 230 from current levels, and it's providing a decent trading opportunity from current levels. So a stop below 175. I think it's an excellent trading opportunity, but it's on a breakout. So be careful; it could move really quickly.
Okay, and our very active producer tells us one more trivia, that on today's session 1 year ago, Adani Enterprises was at a 52-week low and currently trading at the levels that it is. Thanks a lot, Jay, for joining in today and giving us your thoughts. Always good having you. Nipun Mehta, market expert Johnson, on the show as well. Nipun, well, this 1 year, and in 1 year lots can happen. But it's, if people were saying that the first 2 years, rather in the last 3 years, if the Adani Group stocks had not made a move, they've certainly started making a sound, large, noise-making move in the last 12 odd months. Almost every stock in that group is now nudging new highs, save for Adani Power, of course, which has got the sectoral and individual problems of its own.
So, good afternoon, Neeraj. I think what I see as a clear trend over the last 1 or 2 years is there had been a drag for a lot of these groups which had been fairly highly leveraged. Some of them had very long-term businesses, annuity businesses, so they were not getting factored in. Over the last 2 to 4 quarters, you've gradually seen increasing consciousness of deleveraging of balance sheets, of ensuring that you do not fall within the. I think the NCLT regulations have definitely helped in terms of ensuring that promoters are brought to book. They're more disciplined. So increasingly all around, you're seeing deleveraging of balance sheets, hiring off of assets, which is ensuring that you're also seeing some degree of consolidation within some of these businesses. I think some core assets which a lot of businesses wanted to hold on to have been sold off. That's helping quite a bit. Certain government regulations are helping. The fact that some of these businesses have got a prop in terms of global demand outstripping supply is ensuring that overall the industry does well. So you're just seeing really a lot of reasons, varying reasons contributing for a lot of these groups, whether it is the Adani Group, it is the ADAG Group, a lot of the metal companies that were there, which were facing a lot of heat from banks and which were running up huge losses. So all of this all around is just ensuring that the overall corporate balance sheet becomes healthier, and that's getting clearly reflected in the stock prices that are there.
Nipun, since we are talking about these names, I want to know if you consider there being merit in faith investing. A lot of themes are more a result of faith that you have in how the theme will work out. Actually, we'll just talk to Navneet in moments from now. But Nipun, since you're on the topic of that faith investing, the reason I'm asking this to you is there was an announcement 3 days back about Reliance being given permission to create a large city in Navi Mumbai. Now the two entities associated with it are J Corp and Skill Infra. We don't know what the debt levels on each of these books could actually be. Maybe Skill Infra is still possible to calculate. You don't know what the eventual game plan of development would be. But ever since those announcements have come out, Skill Infra is not off from an upper circuit. J Corp has had a terrific run too. I mean, are there some of BF Utilities, a classic case in point? People are waiting for years now for that land development to happen, and that's the only thing that is there in that business. Are you finding favor with any of such themes in a market like this?
So Neeraj, when a market typically runs out of ideas, you start seeing this kind of a run up. So I'd like to give two clear examples. One is these kind of land bank companies that are there, which based on certain announcements suddenly start running up. The other is holding companies. Really, when you see in a lot of past bull runs, you typically see holding companies where all the companies within that group have run up significantly, but the holding company hasn't. And you suddenly start seeing that move happening, and we've seen that actually happening over the last 6 months or so in certain holding companies, whether it is with the Adani Group or with different groups, holding companies have actually run up. So our sense is typically that happens when the market starts running out of ideas. Valuations for most of the obvious companies are way ahead of what the earnings are, and the earnings actually need to catch up. Once the earnings do catch up for a lot of these companies which fundamentally warrant significantly higher pricing, you'll probably start seeing cooling off of these faith-based ideas, whether it is maybe holding company ideas or these kind of land bank ideas that are there. Because most of them are, at least the land bank ideas, typically are long-term oriented thoughts, ideas that are there and will take a few years to be actually starting earning revenues. You saw that with defense companies. Gradually, you are seeing traction in some of them as well. But probably they're more the great trading ideas. A retail investor or an HNI who's a long-term investor probably needs to jump onto the train but get off quickly. We've seen what happened with some of those names that you mentioned in 2007, 2008, which were ruling at significantly higher pricing, and which became 10% of what they were quoting at in 2007. So one needs to be cautious of some of these ideas. Probably great for trading, probably great for getting in and coming out on a short-term basis, but not necessarily. I would recommend them very strongly on a pure fundamental basis.
Okay, stay on, Nipun. Much more to talk about. Gaurav, stay on as well. Before we get into what dealing rooms are recommending in the session today, first, let's tell our viewers what stocks are likely to come into the F&O ban and likely to get out of the F&O ban as well. Navneet, what's the list looking like?
Well, two stocks that can enter into the F&O ban for tomorrow's trading, and both of them are trading at their fresh 52-week high in today's session. One of them is Jindal Steel and Power, which has had a great rally for the second straight day, and the other one is Jain Irrigation. That stock's also trading with gains of almost closer to 4 or 5% last when I checked. And if you look at the open interest yesterday, it was almost 86 for JSPL, and for Jain Irrigation 82. It looks like by the action which has been seen today, it can breach the 95% mark. The other one, which has just reversed its losses in the intraday session. If you could just pull up the intraday chart of Reliance Communication, that was in the F&O ban. And remember, this week was largely about profit booking for Reliance Communication. The stock's now up almost with gains of 9%. And I've seen some unwinding which is coming for a lot of the option strike, and even the Reliance Communication January futures have seen OI shedding. If you look at the overall open interest, yesterday was almost 82 to 83%. And if it breaches the 80% mark, that will trigger the stock coming out of the F&O ban. So do watch out for all these three counters, at least in tomorrow's session.
Okay, we'll watch out for these. Thanks a lot for that. Get a sense of what dealing rooms are recommending in the session today as well. Darshan and Yatin join in with their channel checks. Good afternoon, both of you. And Yatin, let's start off with you. What are you gathering from your sources?
Thanks for that, Neeraj. And, as Navni was talking about Jain Irrigation, that is one stock which is quite active in the future and option segment. A couple of block deals also happened in the cash segment, post which, the stock saw some uptick coming in. So 6% up for that one. And dealers still believe that there is some trading upside to that stock, and hence a BTST. Wokhard on the contrary, and in general we have seen the pharma stocks being weak in the marketplace. So here also domestic fund flows do indicate that there is some selling in the counter which can happen over the next few days. And watch out for Bhushan Steel. This is one stock wherein dealers are indicated that there can be some aggressive bidding that can happen moving forward. And on an overall basis, if you look at today's trade setup, steel stocks are buzzing in trade. So on the back of that sector doing well, dealers are recommending a few mid caps in the steel sector. But Darshan has a few more.
Yeah, so one of the stocks that's been actively spoken about, and that is the entire pharma space. You can see Dr. Reddy's is up 3%. 2%. The FDA has come out with a circular indicating that they would want faster approvals for generic companies, and that has got the entire pharma space buzzing in trade. So pharma stocks, is something that, dealers are clearly watching out for what happens next, because they have all been beaten out of shape. There is BF Utilities, which is up almost 3%. There's a buzz of a possible corporate announcement that could come in. So BF Utilities is being spoken about. And finally, Ujjivan Financial has also been spoken about. Navbharat Ujjivan and Navbharat Ventures was the last one, 5% up. Some of the HNIs are actively accumulating the counter. So Navbharat Ventures is something that dealers are talking about.
Well, up 5% in today's session for sure. Thanks a lot for that, Darshan. So those are some key stocks to watch out for. I tell you one stock that has really shot up in trade again and now trading at live highs is Sterlite Tech. That stock is up 11% today, and now I think trading at somewhere around 333. That's a 10% move, 4.5 million shares traded, and nothing new in the story. It's a well-discovered, well-known story. Just that it's an expensive stock on the current or 1 year forward multiples. But if you take into account the next 3 or 4 years, and if you believe in the story, maybe there is more in store. Nipun, it's a hard call to make, right? How do you look at a stock 4 years, 5 years hence? But that's what almost everybody who's sold on Sterlite Tech seems to be suggesting. Have you looked at the business?
Well, again, Neeraj, while staying away from talking about individual companies, but if one looks at the optic fiber business that is there, it has been to a degree showing promise since probably last 3 or 4 years. Ever since there was the significant shift that the telecom industry was making into optic fiber, actually much longer than that. But there was significant investment that was happening into the optic fiber cable laying infrastructure that was there. But the entire industry did fall short of significant order flows coming in. You've seen that in the other 1 or 2 listed companies as well, which are in the similar business. And they were dependent more on offshore business as opposed to the onshore business that was there. So probably the long-term opportunity does exist, but we aren't really seeing the traction that should have been there in that vertical for some time now.
Okay, 3:20, that time of the show, and we get in closing strategies. Gaurav, if you had to bet on a stock, or it could well be an index strategy as well, but what would be your top BTST or STBT as the case may be?
Well, for BTST, EST looks quite strong. We have seen 6-10% intraday long positions getting built. In the last two trading sessions, there has been an ovation of 10%, even a breakout on daily chart. So everything augurs well for the name. Can test levels of 1120 or so. One can have a small surplus of 1075 and buy. Second would be Ujjivan. I don't see too much of ovation happening in the name, but it's more of a technical part for the reason that it multi-month downward sloping trend line that has been reached, and volumes have been quite decent today. So it's sustained 405, 406 today, and I expect 420, 425 in 2 days. For tomorrow, I think 415 can be the target and 401 can be the stop loss.
Okay, so those are a couple of the trading strategies. Let's just pull up the intraday chart of Raymond. That's up almost 4%. I guess that's trading at day's high. It's also touched its fresh 52-week high. It's crossed the 1100 mark in today's session. And this is the other multi-bagger, I would call it, of 2017. Gaurav, on the charts, on the upside, what levels will you be watching out in Raymond now?
Raymond has seen a strong breakout. The momentum has continued. It's been making higher top, higher bottom on weekly charts as well. The immediate targets can be seen around 1130, 1140 zone. Fresh buying is avoided for the reason that the surpluses are coming a little bit deep. So 1050 is the support level. So, and it can be utilized to do fresh longs or fresh buying in cash market. But at least if somebody has only bought, can help on the name. Have a trading stop loss for upset targets of 1130, 1140.
Okay, that's the call coming in here, Nipun. The top story today that we have been tracking, government has finally presented the demand for additional grant that will be used to fund public sector banks. If you had to pick some of these PSU banks, do you think you will really be willing to get in at this point of time, or you will still wait for, the definitive action on NPA and stay away?
Well, Pradeep, we've been talking of recapitalization for close to 1.5 to 2 years now. I remember very clearly the initial step of 10,000 crores and then of 25,000 crores was announced by the government, which clearly was inadequate. We've seen announcement of significantly larger sums through recapitalization bonds. Probably that also needs to come by quickly. Our sense is the greater the delay, 2 or 3 factors kick in. One is the fact that in the interim, whatever opportunity of credit growth that is happening is at least getting missed out by some of these smaller and mid-sized banks. The larger banks probably have that liquidity still and are able to participate, but the smaller ones probably aren't. The second is a possibility of consolidation that should have happened some time back in these smaller PSU banks, which have constantly been bleeding. In certain cases, the entire net worth has been eroded. The book value is inching on getting into negative. And probably it's time that some of these banks are merged into larger banks. So that's an opportunity getting missed out. 3, I think a lot of the NPA provisioning that has happened for a lot of industries like metals or infrastructure, we are seeing a lot of these companies gradually turning around, trying to strengthen the balance sheet, hiving off a lot of assets that were there. We've seen several groups, including the ADH Group, Jayaprakash Group, all of them constantly hiving off larger assets and ensuring that somehow they stay away out of NCLT and ensuring that the balance sheets are much stronger. So probably you are seeing the reversal in terms of industry performance, in terms of corporate performance of sectors which were badly bleeding some time back or 2 or 3 years back. And at some stage, or at a stage when banks actually needed that capital, it's been found wanting. So I think if you look at this kind of funding happening maybe in the next 2 to 4 quarters, it might probably just be too late in terms of actual participation, where a lot of the businesses in terms of credit growth would have been taken up by either the larger public sector banks or the private sector banks that could be there. So I would still look at the PSU banking space with a degree of caution. If at all one needs to look at some of them, only the top 2 or 3 banks warrant some amount of attention. I would completely stay away from the mid-sized and smaller-sized banks, which will continue to still see some degree of pressure on their balance sheets.
Okay.
I think the other factor, Pradeep, also which needs to be looked at very closely is the fact that bond yields have moved up, and that's something which is acting as further pressure, not just probably on the December quarter results of some of these banks, but probably even the March quarter, depending on how the interest rates move.
Okay, Gaurav, before we wind up, quick thoughts on any of the top index gainers today? Tata Steel, Reddy's, actually ONGC and L&T too.
L&T has given a multi-month breakout. I think wrong to say this strategy month, but multi-week breakout, multi-month breakout has been seen. If it sustains 1290, 1300 zone, I think this can be one of the best index stocks for the year. On the upside, targets of 1450 now looks quite achievable, and it is towards 1300 can be bought with a surplus of 1285, target of 1450.
Right. Can I just highlight 2 or 3 more stocks from the broader markets which have just gone up? Smart Link is the one which has surged 13%. It's touched its 52-week high in today's trade. Camlin Fine is the other one which has touched 52-week high. And as you can see in the intraday chart, the gains have just come in the last 10 to 15 minutes of trade. That's Canfin Homes. I'm talking about Camlin Fine. That's the stock which has gone up. So that's up 11%. And Uptown, I don't know if we mentioned this stock during the show or not, but that too has seen good amount of gains of almost 12 to 13%.
We'll highlight all of these and more. But let's first start wrapping up the markets by talking about the large caps and the indices. And suffice to say, a good day for the indices, Pradeep.
Definitely. If you look at Nifty Bank first, because this is option expiry day, and 25,500 was a key point to watch out for. We are ending very close to that. 160 points higher on Nifty Bank. Nifty is up 65, closing above 10,500. So that too looks good enough, going by the kind of correction we had seen yesterday. Mid cap and small cap doing a tad better than the key indices. Let's now look at how Sensex stocks have done. And you have Tata Steel topping the chart, as you mentioned. Commodity names, ONGC is the other one which has gained, and Coal India higher by 2.5%. You also have some contribution from other sectors like Dr. Reddy's, Asian Paints, L&T. Across sectors, we have seen buying among heavyweights, and the banking stocks are actually much down there. It was SBI, IndusInd Bank. These are 2 key contributors. On the other hand, we had Tata Motors that declined after the sales numbers came out. And also you have Power Grid, Infosys, Axis Bank, ICICI Bank. Private sector banks, in fact, figure among key losers in today's trade.
Well, Pradeep, from the broader markets, I've got a long list. It's turned out to be a good session for the markets today. Let me start off with Bissa Industries. The stock has done pretty well in today's session, as you can see on your screen. Good gains seen, and it's closed almost at its day's high, so that's a positive sign. Jindal Stainless is the other counter, which performed really well, so watch out for that also in tomorrow's trade. Closed almost at day's high in today's session. That registered good gains. Uptown, we just mentioned for you. And these chemical stocks were performing pretty well. So the likes of Meghmani Organics, Sudarshan Chemical, both of them registered good amount of gains. The other pocket which did well was the steel sector. We've seen good gains for the Nifty Metals Index. So look at the constituents of that index. Jindal Steel and Power, that was your top gainer in that index. Steel Authority trading almost at its 52-week high. That too has seen good amount of gains in the last 3 months, and a reversal seen for Reliance Communication, a counter which was seeing profit booking throughout the week, reversed the gains. Let's see whether it comes out of the F&O ban or not, but almost 11% higher, closing at day's high, very closer to the mark of 34. The PSU banking space was buzzing today, and right from the opening session, IDBI was gaining in trade. That closed with gains of 8.5%, and Punjab National Bank was the other one which did pretty well. Titan touching its fresh 52-week high. Good guidance, in fact, coming from the management this week that the Q3 jewelry sales will be good. The other stock, Adani Enterprises, which was up almost 7% 7 to 8% yesterday, saw good gains in today's session as well. That stock saw gains of almost 4%, and surging in last half an hour of trade was Raymond. That too touched its fresh 52-week high, crossed the mark of 1100 in today's session, Neeraj.
Yeah, but the last few days, Navneet, I haven't seen too many nifty names gain 2-3% and a cluster of them doing that. I think the heat map will show that. So we're ending very close to the high point of the day, in fact at the high point of the day. But look at the heat map and look at the top column. All the stocks over 2%, which is quite a rarity compared to what we've seen the last few days. Even on days when we have had a 1% gain, we haven't had a cluster of stocks moving up so well. It's been a good day of trade, and heavies like L&T, ONGC, etc. participating. Let's get the contributors list. Not too many stocks on the losing side. You'd probably have maybe Infosys, Infosys up there, and some auto names, and autos have been having a poor day the last few. But look at the gaining side. L&T, SBI, RIL, ONGC. A telling point, we haven't had the need for the HDFC twins to participate on the gaining side, and yet we've done well, because otherwise the last few days the HDFC twins, by virtue of the weightages that they have been featuring on either side. More often than not, when we've gained, we've had one of the HDFC stocks to participate. In today's session, not quite there. So we've done that despite large participation by private banks or private NBFCs, which is quite a remarkable sign today. Volumes will come up on your screen. I'll be very interested in seeing what the DI volume is today. The last 3 days, the DIs haven't quite participated. Let's see if today is any different. Well, the NSE cash market volume is not too bad, but it is the NSE F&O volume, which again, you would argue because of this weekly options expiry would have gone up. So not quite not understandable, but it's the cash market volume which is interesting. But again, as I said, I'll be very, very interested in watching what the DI number is in today's session. The last 3 days they've been absent. Which one? The NSE cash. Yeah, which sub 30.
30 to 32,000, but 36 is definitely on the higher side.
Yeah, usually, so 30 to 30 must be the average. My memory served me about 30, 36 I thought was slightly higher. So the options data I can understand. But Navneet, Pradeep, I really think it'll be interesting to see what the DI numbers are looking like in the session. The last 3 days, we've had 2 sell numbers, 160 crore buy number. So they've been conspicuous by their absence. Can they make a bit of a presence felt today is the question mark. No big deal really. It's just some stats that you would probably want to watch out for.
Traders have had trouble trading Nifty because every time you thought that market has reversed, very next day it corrects. So let's see.
Interesting to see what happens. But it's a strong close, one that the bulls will be happy about, and all-round participation more importantly. Maybe final thoughts from our guests as well. Gaurav, you want to take a pitch? Do you think there are higher levels in store?
The trend is positive, but I would not rate too much with today's move on data for the reason that until unless bank Nifty does not perform, I don't see Nifty reaching towards the higher levels. One, there is a strong resistance in Nifty itself at 10,525.40 zone. Once that is taken out, there will be strong J1 daily chart. For bank Nifty, there is a strong resistance at 25,550. There is almost 90 points from the closing price of bank Nifty. Unless that is not taken out, we can still see some sort of reversal, some unwinding happening in the and that can pull the Nifty down as well. So I would wait for bank Nifty. That will decide the orientation of where the Nifty will be going in next 2 day sessions. I would wait for bank Nifty across 24,550. Then Nifty can even touch levels of 10,620 next week.
Nipun, closing thoughts from you?
Well, if you see the movement in various segments, I think very clearly 2017 saw significant outperformance by the mid caps and small caps. You're seeing that continuing on top of the huge gains that one saw in 2017 in both these segments, both the mid cap and the small cap segments, significantly outperforming the large caps. Our sense is, a momentum like this needs to be looked at more from a bottom-up basis, selective stocks. Let's say, pick any sector. Let's say infrastructure, for example, or cement as an example. There would have been run-up in a lot of these companies. Probably 2018 will hold in store is being extremely selective about companies which are potentially turning around, which are becoming a lot more conscious about their balance sheets, which are becoming a lot more conscious about execution of their projects. I think the re-rating of some of those companies is likely to be more pronounced in 2018, and one needs to be watching out for those kind of stories as opposed to the continuing momentum that we are seeing in some of these companies where we've seen 5 baggers, 10 baggers in the last year or so. So clearly, I think the key is to be selective in a lot of these mid caps and small caps going ahead.
All right, Nipun as well as Gaurav, thanks a lot for joining us today and taking us through your views in the markets. Well, it's time for us to slip into a short break. Don't go anywhere. We'll be back with more on the other side.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Welcome back. You're still watching Countdown with us on Bloomberg Quint Live. Well, a strong closing for the Indian markets, but we're also seeing strong trade for the European markets today, with all the three benchmark indices registering gains there, and DAX particularly, and also CAC. Both these indices have seen gains of closer to 1%. Let's head across to Yuan Potts, who joins in from the London studio with the complete lowdown on the equity action there. Hi, Yuan.
Good morning from London. After the Nikkei's best opening day since 1996, European stocks joining that mood of global optimism. Equity markets gaining the most in more than 2 weeks so far today, on signs the global growth story remains intact. Commodities also extending their record run of gains as oil climbs from its highest close in 3 years. And the euro also strengthening as economic activity accelerates in the region. Let's focus on that stock story though. We're just over 2 hours into European trading, and there's a sea of green on equity traders' Bloomberg terminals today. Almost all the main markets higher, with Italy's FTSE MIB up 1.3%, Spain's IBEX up 1.1%. Those are two of the best performers so far this morning. The builders and the car makers, they're leading the advance today, but a bit of softness among real estate companies and the food and drink sectors. Core European bonds pairing yesterday's gains. Meanwhile, the euro advancing towards a 3-year high today. That's as PMI data show that economic activity in the euro area accelerated to the fastest pace in almost 7 years. Back to you.
All right. Thanks for the update from Europe. And moving on, the government is looking for a parliament nod for PSU recapitalization bond. These bonds are likely to have a non-SLR status. Let's head across to Nipun, who joins us from New Delhi studio with more details.
The recapitalization bonds
that will be used for infusing capital in public sector banks will not have an SLR status, meaning banks who will be subscribing for these bonds will the amount would not add up to their statutory liquidity ratio of 19.5% as mandated by the Reserve Bank of India. According to a government official, recapitalization bonds will not be tradable and will be cash neutral for the government. According to the same official, the interest payout for the government will be calculated by the Department of Economic Affairs and will be notified soon. Remember, the government sought supplementary demand for grants worth 80,000 crore rupees today for infusing capital in public sector banks through issuance of government securities.
All right, many thanks for that. On to some other stories. Jaiprakash Associates lenders have some time before they have to wrap up the insolvency proceedings. The RBI has asked ICICI Bank, which is the largest lender to the company, to first seek clarification from the Supreme Court before proceeding with the matter. Vishwanath Nair is standing by with the details. Vishwanath, what's the issue here?
What we understand through our sources is that Jaiprakash Associates was part of the 29 stressed accounts that the Reserve Bank of India had put in the second list, where the bankers had time till the 13th of December to resolve it outside the NCLT process, failing which they would have to take it to NCLT, simple and clean. But what happened eventually is that the Reserve Bank of India reached out or has had a communication with ICICI Bank, the lead lender in this case, and told them that you hold off temporarily on any insolvency proceedings till you get some clarity from the Supreme Court whether the bankers can go ahead and invoke any insolvency. The issue is in the JP Infratech case, which is part of the first 12 insolvency cases, the Supreme Court got involved in the matter and has stayed the insolvency proceedings. Apart from that, they've also put in some kind of restrictions on the directors and the promoters of Jaiprakash Associates, which is the promoting company of JP Infratech. They've said that you cannot sell or trade in any of your assets. So till there is some clarity from the Supreme Court, the bankers cannot go ahead and invoke insolvency in JP Associates. That is what we understand from our sources.
Thanks for that, Vishwanath. Let's move on. In a bid to take on Chinese imports, the government is considering a 7.5% tax on imported solar panels. Anindya Upadhyay of Bloomberg News joins us with more details on that.
So India is considering levying a 7.5% import duty on solar panels in a bizarre move, is what we hear from our sources. And right now, solar panels do not attract any duty. Now, I call it bizarre because India has the second largest solar target in the world after China. And to fulfill that, to set up these 100 gigawatts that Prime Minister Modi envisages to set up by 2022, India relies heavily on imports. And it is because of cheap Chinese imports that India has been able to produce discover actually very low, solar tariffs and become one of the cheapest destinations in the world to produce solar energy. Now, a 7.5% duty, which is proposed on imported solar panels, is going to increase project costs. And the reason we hear for it is an extension of a 2017 tax dispute that happened at the Chennai port. Now, what happened was that in 2017, for months, the Chennai customs had withheld, containers, hundreds of containers having solar panels, and they argued that solar panels generate electricity, so they are motors, and they should attract a duty equivalent to motors, that of 7.5%. This dispute continued because the Ministry of New and Renewable Energy requested the Finance Ministry to exempt solar panels from this duty because panels are panels and motors are motors. However, we hear from sources that the Finance Ministry is actually considering a reclassification of solar panels as motors so as to make the duty applicable. Also, in 2016, there was an identical dispute, and the customs had then produced, sent a directive which is there in the public domain, which clearly said that solar modules should be exempted from duties as long as they weren't connected to a motor or an electrolyzer. However, this time around something else is happening. A duty looks likely, and right now the Finance Ministry, we hear, is considering the Renewable Energy Ministry's request to exempt solar projects already awarded, levying the duty on panels which have to be imported for future bids. So this is going to make solar projects expensive, and so will the tariffs rise. So this is what we hear from our sources. Back to you.
All right, moving on then. One of the brothers is known to be a big yoga enthusiast, and besides being an avid biker, he also decided to stop producing the iconic Bajaj scooters. Much to his father's displeasure, his younger brother Sanjeev Bajaj is not as flamboyant but has built a good financial services business over a span of 10 years. Today, we look at the two Bajaj empires which were carved out as two separate groups in 2008, and Yatin Mehta has done some number crunching to see who out of the two Bajaj brothers have performed better. Yatin, over to you.
Thanks for that, Navneet. And if you look at the two brothers, the split go backs somewhere in 2008. This is the effective date of the demerger of Bajaj Auto, which was split into two units. First was the automotive core business, which is now known as Bajaj Auto, and also we had Bajaj Finserv and Bajaj Holdings come out of the demerger or the scheme of arrangement. Now, if you look at Rajiv Bajaj, he's a mechanical engineer from the University of Pune, and currently, looking at marketing and operations as well as day-to-day running of Bajaj Auto, which has seen strong growth in his tenure. In fact, if you look at the sales CAGR from period of FY09 to FY17, the compounded annual growth rate for sales was 12.5% and profit close to 28.6%. And Bajaj Auto also sits on one of the best return ratios and the best profitability in the two-wheeler segment, despite being the second largest two-wheeler manufacturer. Talking about his younger brother, Sanjeev Bajaj, he's also a mechanical engineer, now running a financial services giant company in form of Bajaj Finserv and its subsidiary Bajaj Finance. And also, if you look at the return ratios and the growth ratios for Bajaj Finserv and Bajaj Finance, sales CAGR was close to 68% for Bajaj Finserv and 42% for Bajaj Finance, and profit CAGR for both of these companies was over 55-60%. So good, strong performance that we saw post the split coming in. So from a period of FY09, strong gains coming in. Now, if you look at the current market capitalization of Rajiv Bajaj's controlled Bajaj Auto, it's close to 94,500 crores, whereas Bajaj Finserv and Bajaj Finance put together, which is managed by Sanjeev Bajaj, that has a market cap of almost 1.81 lakh crores, almost double to that of his elder brother, despite the fact that the moment the brothers split, and the Bajaj Auto, auto company and the financial services business split, the market capitalization for both of the businesses was similar. And despite that similarity, over the last decade, we have seen the financial services business of the Bajaj Group extremely doing well. In fact, both of them have created a market value for its shareholders. But clearly, Bajaj Finance and Bajaj Finserv is something which has zoomed nearly 20 times in the last 10 years.
Well, Yatin, I'm tempted to ask you a question, like you mentioned earlier as well, that getting out of scooter was probably a wrong decision, a bad decision. But even Rahul Bajaj didn't tell Rajiv Bajaj or the whole world that future belongs to gearless scooters.
Yeah.
So the scooters that Bajaj was making no longer exist. So probably Rajiv was right. Or wasn't?
No. So if you look at Bajaj Auto, and a couple of times I have myself asked the question to the management as to why not scooters and why not gearless scooters. But their philosophy is that they are a motorcycle company. They would not like to do something which is not of their core competence, despite the fact that the growth that we saw in the motorcycle segment versus the scooter segment was quite high. In fact, the motorcycle sales have slowed down. But when the management thinks that when you are in a global marketplace, you cannot have pizzas at McDonald's and burgers at Pizza Hut. So it's something of that thinking that the management is of the thought process that if they are doing a motorcycle business, do it quite well, and probably they are targeting strong market share across the globe. So it's not only the domestic market that they're looking at. And remember, Bajaj gets almost more than 1/3 of their sales from the export markets. So they want to be a global giant in the motorcycle space. Of course, scooter is something. If they had, probably they could have done more in terms of number, but they thought that probably they will lose their core competency, which is motorcycles, as on date.
So it pales in comparison to what the financial services businesses have done, but standalone compared to a clutch of other two-wheeler majors who have a 10-year, 11-year record, does Bajaj Auto fare up reasonably okay, or are there other winners? I mean, it is, for a matter of speaking, a global company.
So Neeraj, by volumes, if you look at it, TVS Motor has come very close to Bajaj Auto. But Bajaj Auto has been able to maintain that 20-22% kind of a EBITDA margin range, unlike Hero MotoCorp, which is sub 15 or sub 17 now, or probably a TVS Motor, which is still sub 10. So they have never compromised on the profitability, and that explains the reason why, despite being the second largest two-wheeler manufacturer in India, they are one of the most profitable two-wheeler companies in the country. Or probably globally also, they might be one of the most profitable two-wheeler company when you look at it from consolidated, or if you include the three-wheeler business as well. But in terms of volumes, clearly Hero MotoCorp must be doing an average volume of close to 5.5-6 lakh units per month. Bajaj would be close to 3.5, 3 lakhs sort of run rate. So still the difference between Hero MotoCorp and Bajaj Auto is there. Probably because of scooters, probably because of low-cost motorcycles that Hero MotoCorp manages to roll out in the marketplace. But clearly Bajaj has been able to maintain the profitability and the return ratios.
Thanks, Yatin, for these details. So maybe, Neeraj, we have just seen the first lap. The race is still on.
Or maybe Bajaj, Finserv and Bajaj, these stocks are more of growth stocks now, because this is the cycle for NBFCs, and autos have become more of a value pick now. You can't expect multi-bagger returns, especially from these large cap companies. We've seen good returns from Maruti for sure last year, but to expect that sort of return from everyone, I don't think it will be fair. So it's more of a value pick now.
And the kind of lending that Bajaj Finance and Capital First are doing now, we haven't seen a full cycle there. So maybe it's too risky right now, although it's too expensive as well. So we'll have to wait and watch, because Bajaj has seen several cycles, ups and downs, in terms of even product life cycle, so to say, that we have discussed.
Well, on to more news and updates and some market voices. Vikas Khemani, Fieldwise, spoke to us earlier on his view on how the year could shape up for the markets and for the economy. Here are what he had to say.
I think structurally markets are looking decent. Markets are on upward trajectory. Definitely earnings are around to pick up. So, and we will see partly in this earning season. We have quite a bit of events ahead of us. So I think budget is there. So that can also kind of build some expectations. So I don't see too many reasons for a significant weakness in the market. Having said that, you can never rule out anything which can come from macros.
So any targets if you have for 2018?
I think the only thing I can say is that 2018 would be a little moderate year than 2017, but it is definitely going to be a good year. We will start seeing corporate earnings pick up in this year. We will see 15 to 16% kind of earnings growth in FY19, which essentially means you can see similar kind of return. Last year, last part of the return came out of the Nifty re-rating, a very small part, almost only I think 20-25% of the returns was from the earnings growth. This year around, I think you will see large part of the return coming from the earnings growth, then the further re-rating. And I think we should expect anywhere between 15 to 20% kind of return in this year.
If with the higher cost of funds and the likelihood of yields at least staying at these levels, if not moving higher, is that a cause of worry for what is arguably the largest weightage on the index, which is the financial space?
So as I was saying, I think definitely this year you will start seeing a lot of micro improvement. We've been worrying about the corporate earnings. We've been worrying about capex picking up. So I think all those things will start seeing significant amount of reflection in the numbers. At the same time, I think this year we have to worry about some of the macro factors which can come both from the global as well as the local issues. We are in a situation where Fed is hiking the rate, which is and also reducing the balance sheet, and due to the US tax cuts, you might see flows back to US. So in that sense, US dollar strengthening is a reasonably good probability trade, and if that were to happen, you might see some sort of both cost and liquidity issue as far as the emerging markets are concerned, and that will definitely drive the cost up. Coming back home, I think inflation might start looking up given what's happening around the food prices and also a little bit around the oil price. So I think in my opinion, interest rate cut is ruled out. You might start building a case for a little bit of possible hike coming through, and if that were to happen, you might see some sort of markets are partly factoring in that. So you might see some sort of contained. And the reason why I say that this year may not have re-rating further. Otherwise, when earnings growth are coming about, you should see also re-rating. But because of this somewhat cautious macros, I feel re-rating might not happen. I feel sectors which are going to get impacted by the interest rates hardening might have a little bit of compromise on the profitability, but otherwise I don't think they're not doing well, because financially is such a big theme over the next 5-7 years. I don't see any reason why that will not do well, and we are not staring out some serious hike on interest rates. Maybe it is 20, 25, 30 or 25 to 50 basis point at max. So if that is the case, I think market, I'm sure, will absorb that and move forward.
So with that, it's a wrap on this leg of Countdown from Navneet, Pradeep and me, Neeraj. Thank you so much for watching.